All right, everyone. Welcome to the live educational stream here in the TraderMade Discord. Today's stream is going to be covering probably one of the most important things here at TraderMade, which is the TMade model. This model has significantly helped my trading and has made me money in the last few months. And it's a model that I trade very often because it appears a ton in the markets. And it's one that I'm going to be teaching you here right now, live. So, a couple things with the model, right? What are we looking for? Well, number one, we're going to be looking for some sort of liquidity sweep. Okay. Number two, we're going to be looking for some sort of higher time frame imbalance. That could be a 15-minute. That can be a hourly. Sorry, hold on. It could be a 15-minute. It could be an hourly. It could be a 4-hour. It could also be a daily. Okay. And number three, we're looking for an IFVG, right? An inverse fair value gap, plus a fair value gap. Okay. And number four, and this is optional, okay? These are going to be optional. It's going to be SMT with ES. Okay. Now, there are a couple other things that we can add to this, but we're going to keep it simple for today's lesson. And this is what we're going to be looking for, right? So we're going to be looking for the liquidity sweep. Okay. Now, this liquidity sweep has to be important, right? We want to be able to sweep some sort of liquidity, some sort of targets. And we're going to use this example from Friday's session, which is a trade that I took and was able to grab 80 points on this trade. And that was a trade that made me over $2,000. I felt super confident in this trade. So I was able to go in with about 3 contracts, 3 mini contracts, which is about $60 per point, right? And what I was able to do is I was able to trade one of those for 10 points, take them off. The second one for 20 points, take it off. And the third contract I held for 80 points and then took it off. So it was a really, really nice trade and a great example for the TMade model. So let's go ahead and show you guys what I mean when I say TMade model. Do you guys have any questions so far? Do you guys understand everything I'm talking about so far? Okay, so chosen, BDA chosen one, understands. 2gen, understand, I'm with you. Do you look for the inversion fair value gap and fair value gap to line up? Yes, that's going to be my next. That's going to be the important point, right? But first, we're going to just cover the liquidity sweep and the higher time frame imbalance. Okay. So this was, where is 9:30 open? So 9:30 opens exactly at, and maybe for this I'll put on. Hold on one second. Okay, so where's 9:30 open? Okay, this is your 9:30 open right here. Okay. You guys can see that? Make it a little bigger for you guys. So that's our 9:30 a.m. open, right? So that's New York open. Let's move this up a little bit here. Okay. So here's your New York open, right? 9:30 a.m. And what you can see here is that price, okay, is inside of a higher time frame inversion. So what is this inversion here on the 15-minute? It is going to be your 15-minute bearish fair value gap, which for me, M15s, right, or 15 minutes fair value gaps are really important, because for me, the higher time frame starts at 15 minutes. And because we're looking for 1 minute entries, it's very important that we look for those 15-minute gaps, because the 1 minute and the 15-minute correlate together. So I like to use the 15-minute. Obviously, if there's a higher time frame, an H1, an H4, or a daily, you can also use that. But I find that 15 minutes, they give you a lot of great precision. So here's a 15-minute, right? I'm going to go ahead and mark it M15, and it is a bearish zone. So the cool thing that you can see here is that on the 15-minute chart, okay, the 15-minute candle body never, ever doesn't ever close inside of the upper range of that 15-minute, right? Now, if I'm trading this, okay, I don't want to see price trade above that 15-minute, above the midpoint or the upper half of the 15-minute bearish fair value gap, right? I want to see price staying below, because that means that bears are in control. But what makes this a different instance, and why I like this wick, is because this wick creates the first thing I look for in my trade. It is doing what? It is grabbing it's grabbing liquidity, right, from up here. So you're grabbing that liquidity from here, which takes out all of this liquidity as well. Okay, so we're getting liquidity from there. All this stuff here has now been taken out on this move. Okay, now this high here is Thursday's high, which I believe is previous day high. And yes, in a perfect world, previous day high would have been amazing to take, right? But because we have this bearish fair value gap here, okay, we also have this low here, okay? We have this high here, all right? We're trading within this range. And for me, if we can get into premium of the range, okay, which is the upper 50% of the range, we're going to go ahead and mark that out here. Okay. So now we are trading, right? I'm going to move this over here so you can get an idea. You can see it a little better. Okay. So we're trading exactly into 0.79 and 0.88 of the low and high of this range. Okay. So for me, this is a perfect area to look for shorts, especially if we have a bearish imbalance like we do here. Okay. So 9:30 opens, right? Or right before the open, we do take out this liquidity here. That's my liquidity sweep, right? Tapping into 0.88 on the fib. Okay. And I'm looking for lower prices now. So the TMade model gets created on the push down. And we're going to go ahead and break that down for you guys. So let's hop over to the 1 minute chart. Okay, beautiful. So what I'm seeing at 9:30 at the open is that we have these lows here, okay, which was, this is Asia low and this is the London low. So we have both of these lows, and I'm also looking at this low, right? Now, I don't need this low because for me, taking out Asia and London is enough liquidity for a push higher, right? So going into Friday, that's what I was looking for. I was looking for a liquidity sweep from above, tapping into a higher time frame gap, okay, which we do right here. All right. And then I'm looking for my TMade model, which is this candle that takes out the high here, that takes out the liquidity inside of the premium of the range. Okay. That candle creates on that push on the displacement higher, creates this little gap here. That gap is the first inversion fair value gap that I'm looking at that is being inversed on this push lower, correct? So I'm going to move that out to there. Okay. And we're going to make this orange because I want it to stand out for you guys. So there's the gap there. We're going to make it a little darker here. By the way, Unstoppable, welcome. Welcome to the chat. Always nice to see you here. Okay. So back to the TMade model. So we have this inversion happening right here, and this candle closes below, right? And we're creating a bearish fair value gap as well here. All right. And I'm going to mark that out. Now, these are both 1 minute gaps. And what I'm looking for, okay, is price to return into this area here, but precisely right inside of this orange area, okay? Because that orange is the inversion fair value gap, and it overlaps with that part of the bearish fair value gap. And so the TMade model is based on the portion that overlaps each other, okay? So we're going to go ahead and we're going to call this TMade. That's exactly what it is and what we're looking for. Okay. We're going to put that there and move that over. Okay. So now we have our liquidity sweep right here. The high is taken. We have our higher time frame imbalance, which is this 15-minute, right? We are not closing above. And we have our inversion fair value gap right here, the orange gap. And we have a fair value gap that gets created on the displacement back down, okay? So some people would just mark it into a trade, right? Right here, as soon as that displaces through, inversing this, they would probably just mark it in. Now I, especially on the open, would not do that. I'm always going to try to find confirmation on my trades. So for me, tapping back into TraderMade or TMade model is what I'm looking for here. So we were also waiting for news, and we had this nice push down. This push pushes down into a M15, which was right here. Okay. That's another higher time frame imbalance. So now we have that bearish M15 and we have the bullish M15 down here at the low. We bounce back up, right? We can't trade inside of the 50% mark of this bearish fair value gap, right? We are rejecting inside of the first 50% of the gap, which is very bearish. We're waiting for news. As we're waiting, we continue to come back down towards this 15-minute, and we continue to hold price here, right? Okay, I'm still not in this trade. My entry is when price comes back up and taps towards TMade. Now, how am I entering on this? I'm going to have a short position. I'm always going to have a short position a couple of ticks in front of the TMade gap, okay, a couple points in front. And the reason for that is I have found with backtesting that we don't always come and tap the TMade gap, right? The overlapping area. Sometimes we miss it shortly. So what I've been doing is I've just been front running TMade by a couple points, right? So, and the risk reward is amazing here, right? So TMade, the risk reward here is 456, right? I always use the top of the middle candle that creates that inversion. So I would use this high here, which is also 930 open, right? So my entry is boom, stop right there. Okay. And I'm targeting what? I'm targeting Asia lows, which we'll mark out here. So here's your Asia lows. Let's mark that out. And here are your London lows. Conveniently hanging out right next to each other. Those are my liquidity targets. This is the low of the range here. Now, important to look at this, right? So this is I'm looking for Asia lows and London lows, okay? And what do I want to see happen here on the entry of this trade? I want to see us inverse this 15-minute, right? Because it's held price up once, twice. Now, when we push into it, I want to see price basically either display straight through it or push through it and then hold the midpoint of that gap to the downside, which is exactly what we see. We see a nice push lower, okay? We see a push back towards the midpoint of that gap and then a continuation to the downside. Now this M15 now becomes a inversed M15. So I'm going to go ahead and make that purple. My inversion, my color for my inversed gaps are going to always be purple when you guys are here watching me. Something that's pretty important to just gather is the purple is inversed. The dark gray is bearish. And anytime you see any like bright white colors, that's a bullish gap. Okay. So just keep that in mind. Now, remember I said this is an optional, right? This optional is the SMT, right? Very optional. But we get that right up here when this takes the high, okay? ES never took the high. So that means that ES is the weaker asset, right? It never took the high. So that's optional. I don't need to see that for my style of trading. And I'm happy to take the TMade model whenever we take the liquidity, the higher time frame imbalance, and the inversion and all that stuff lines up. I'll take that every time. I don't need SMT. But if you do get SMT, it's just even more reason to hold the trade, right? Because some people would probably cut the trade here. They would get in somewhere around here and they would cut it at these lows, right? You have equal lows right here. They would cut the trade here. But with SMT at the highs there, it just makes me feel more confident knowing that we could probably get those Asia and London lows, right? And that would be the draw on liquidity. It just makes sense, right? We never took it. We left the Asia low and the London low. Oh wait, sorry, I actually marked this backwards here. So this is your London low. And that one's your Asia low. So let me just fix that. But yeah, so this is my draw on liquidity. It just makes sense. London came down and didn't sweep Asia, and we've just been pushing higher. So this just made sense to me. This was a perfect trade. This is an 80-point trade, right? It was a 7.63 R trade. Can't make this up. This is like probably one of the most beautiful trades of the week. Grabbed a total of 80 points live. And another thing that we could look at here, right, is where does the London low and the Asia low sit in this push here, right? So if we go ahead and we grab the range, right, which is going to be this high. Sorry, it's going to be this high to this low here. Okay. London and Asia is sitting inside of 0.62 and 0.79, right? Which some people call this the OT range. Well, not some people. Most people that trade ICT are going to call this the ICT OT range, right? The 0.62 to 0.79. So for me, that's a perfect target because I'm looking for price to reverse in this area anyways. So for me, this makes sense. I'm also going to use standard deviations to figure out where we can potentially reverse, right? So I'm going to take this high to this swing low point here. Okay. And you could find that -2 to -2.5 is basically sitting within that London low and Asia low, right? Now, you could use this one for standard deviations. You could just go here and move it down to here if you wanted to. Okay. And that would be negative 2.55 would be around this area. And that's fine. You could also do that. But because we did try to push back up here, right? To me, this is that new leg. So I'm going to use the new leg of this to figure out where price is going to go, right? If we don't have this retracement here, then I would use the original one that's right here. But because we have this retracement back up and then a continuation to the downside, I'm going to use this for standard deviation, which lines up perfectly with what basically my target is, right? We ended up pushing, getting -4 here. So that's interesting, right? That's exactly another area of potential for price to reverse. You could also just do a standard deviation of this high here, okay? Because this is the high that took the previous high, and you could mark that low there. So, you know, if you look at this, -2 to -2.5, it lines up perfectly with where price basically taps into and reverses from. So that's how I find my targets, right? I'm looking at potentially what is the draw. For me, it was London and Asia lows. That was the draw, okay? But you could also add those standard deviations and the premium and discount of the ranges to see where price could also reverse. And if your targets and your draw are sitting in those areas, then it makes it more likely that it's all going to play out, right? So this right here, I would say, is probably one of the most A+ TMade models that I've seen all week. And you know, my P&L for this trade definitely speaks for itself, right? So again, plus $2,500 on this trade, and was able to take 3 contracts here. I took one off at 10 points, one off at 20 points, and then the other one ran for 80 points. You guys have any questions about the TMade model and what I look for and why I'm looking for certain things? Please let me know. So 2Gen says the model makes sense. I like how you use multiple ideas that overlap. Yeah, I mean, it's really important to find confluence in the trades, right? And it's important for me to figure out, okay, does the draw on liquidity make sense, right? And if it makes sense to me, what else is around that draw that could help me realize that this is more likely to happen, right? So using your standard deviations and using your premium and discount of a certain higher time frame range is going to help me target the draw better and understand what is likely to happen, right? Not only that, I'm going to take this model every time it appears, no matter what, right? But just because I take the trade, doesn't mean that you're going to know exactly where to get out of the trade, right? So obviously having those draws helps, but if you can add multiple reasons as to why a trade would go to what your draw is, then hey, I rather have more information, right? When you have multiple cons on a trade, do you usually have smaller targets for partials? So I'll be honest with you, Jen. No, right? Normally, what I'm doing is, let's say that I'm going to take this swing high, right? Because essentially my trade is formed on this high that takes these highs, right? This is where I'm getting it on the version of this trade. So my standard deviation has to be here, right? I could use this because sometimes what I'll do is I'll use standard deviations as the trade goes or as price moves, right? And we create newer swing points. I'll just see where it lines up, right? I may not use that standard deviation, but I'm just going to see, okay, does this standard deviation still also line up with where I'm trying to go? So I'm constantly looking to see as price moves, like if I could get a different perspective, right, on where it could go to. So with that said, I'm still entering in on this basically here. I'm just not getting the move that I want right away. I'm waiting patiently for a tap into this move, right? Um, and that's exactly what happens. I get the TMade model gets tagged here, and I get into the short, and the standard deviation from this to this, right? You have -1, -1.5, -2, -2.5, right? So what I always preach is that if you have multiple contracts, okay, you can either take it off at the first low, swing low or swing high that of whatever direction your trade's going in, or you can use, which is what I usually do, -1 as your partial. So -1 is right here, right? So that's 383. The reason why, okay, the reason why I did not follow my rules and take my partial at -1 is because I was already down on the day. The trade before this, okay, was a negative trade. It was a pre-market trade and it was a negative trade. So I was already down. I was actually down pretty significantly. I was upset about it because I didn't follow any of my rules on that trade. There was no TMade model. There was nothing that really made sense, right? It was just me trying to trade a continuation and I got burned, right? So going into this trade, I still used the same amount of contracts that I would normally use, but I did not follow my rules as to where to take partials. I wanted to secure money pretty quickly. So that is why I took 10 off. I took one off at 10 points and I took a second one off at 20. That secured $600 profit. And then the next contract printed $1,600. That was 80 points. So I got like 2,200 out of that, and it put me into very green for the day. And that was my last trade for the whole day. I didn't trade again. Yeah, exactly, Tijen. So I wanted to lock in my money because I wasn't, you just never know, right? You just never know. Especially when you're down on the day, like you just want to be smart. You want to be. I obviously want to take the model. If the model appears, even if I'm down on the day, I'm going to take the model. That's the one thing I will say. I will always take the model because I know that 75% of the time that model is going to print. You guys can do the back testing on it, but it's a great model. As long as all three things that you look for are there, right? As long as you have the liquidity sweep and that liquidity sweep makes sense, as long as you have your higher time frame imbalance, and as long as you have your inversion fair value gap that you pair with a fair value gap, right? And you're using the parts of the trade that overlap. If you do that, it's going to be a very high percentage win rate. And obviously, if you add SMT to the trade, then it's going to be extremely high win rate, because I always say it's like SMT appears, it's like you can add an extra 5% that your trade's going to work out, right? Okay, so 2Gen says, I struggle to understand the draw on liquidity at times intraday, and using the higher time frame imbalances on top of the inversion helps to clarify where price is likely to go. Yep, 100%. So I will say this, right? If I'm coming into the markets and I have a bearish mentality going into the markets, right? And why would I be bearish? Well, coming into the market between Asia and London, okay? Asia and London, we never swept liquidity and we just continued to trade higher, right? And all of this liquidity here, all of that liquidity has already been taken, okay? And on this push higher, all of this liquidity gets taken, okay? But look at all of this liquidity that we've engineered here, here, here. All this liquidity has been engineered and we haven't taken it, right? So that's one way that I could find my bias, right? But here's the key to having a bearish bias going into the open, right? Well, what's the key? The key is you don't want price to open and just dump, okay? You need to see some sort of liquidity sweep on like You need to see the highs taken. Some sort of highs need to get taken for you to get into the trade. Okay. I never want to be bearish and price is just dumping. Okay. I want to be bearish, but I want price to go and take something first because I want people to get trapped. I need traders to get trapped to a certain direction for me to feel confident that my trade is going to work out, right? Because the more people that get trapped on this push high here, taking this high as a breakout trade, the more that this is going to work in my favor, right? That's a ton of sellers sitting there getting into this position. So a ton of buyers got trapped and a bunch of sellers got into their position and now price is dumping. So I want to get in on that move, right? Because I know that when there's pain in the market, we're going to get a nice move. And that's exactly what I did. I was able to capitalize on the TraderMade or the TMade model. I was able to find that there was this liquidity right up here that we took, right? Causing S&T as well as this inversion fair value. Sorry, not an inversion fair value, but a bearish 15-minute that we never closed above. Not one body closes above, right? So all of this is incredible signs to want to take this short. Now, I don't get the short right away, right? We never really tap back in. And some people would have taken it right here. Some people would have taken 444, that tap right back into that 1 minute bearish fair value gap. But the reality is that if you want that higher win rate, it's when price taps into the overlap part, right? It's when it taps into the fair value gap and the inversion fair value gap after taking liquidity and having that higher time frame there. That is the money trade. So if you guys want to trade the TMade model, thumbs up to that because I think it's going to be really great for you guys. It's been great for me. It's what we trade here in the Discord on the live streams, and it really works. Yeah, so waiting for that higher entry also limits the risk for sure, 100%. Because technically, if you want me to give you the honest truth, technically, if you got in short here, okay, let me just get rid of this. If you get in short here, technically your stop is supposed to be the highs. Okay? Technically. That is what it's supposed to be. The reason why I'm going to use this candle high here is because of two things. Number one, that TMade model where it overlaps is so high probability that it's going to work out in my favor that I don't care so much of putting my stop that much higher, right? Because if we can get above that overlapped area, most likely I'm going to be wrong on this trade. So that's the first thing. The second thing is we have 9:30 a.m. open here, right? If I'm bearish and price sold off before 9:30 or right at 9:30, right? Do I really want bulls to get control back above 9:30? No, I don't want to see that. That's extremely bullish, right? And also in my mind, there's no reason to come back up here unless I'm wrong because we've already taken this high, right? And we also have this 15-minute fair value gap. So for me, my stop looks nice here because I have the 15-minute fair value gap. I have my TMade model, right? And I have 9:30 open price right there. So I don't want us coming back up in this range, right? I rather take a loss here, okay? I rather take a loss here. And if price pushes up, let's say we get a wick of some sort, right? All the way up and takes me out of my trade. And let's say that price gets rejected. Okay, let's say this is a wick. Okay. And let's say price gets rejected from that 50%, that consequent encroachment of the wick that took the candle wick that took out the that previous high, right? So let's say this wick comes up and taps 50%. Okay. And then continues to push lower and close back below this 15-minute here and then continue lower, right? Well, that's fine because most likely I'm going to probably get another inversion right around here right? That I'm going to be able to capitalize on. And my entry would be something like this. Still looking for those lows, right? So I'll take a loss of 15 points, right? And I'll get back in if it moves in my favor again, right? But if we start trading higher, I don't want to take a loss. I don't want to take a 50-point loss. Like, I just don't want to do that. So does that make sense? Chen. I favor the smaller stops as well, so that totally makes sense to me. Okay, sweet. Well, I'm really glad that you guys are understanding this and that it's clear. I think it would be good for us to go find one more example of the TMade model. So let's go find. Usually, when it's a reversal model, right? So usually, if you go to let's see. We want to go to 50 minutes. Okay. You need to find a 15-minute fair value gap here somewhere. Okay, let's mark this out. It's a bullish gap. So we're going to make it white here. And what we want to do also is I'm going to put the unicorn here so I could find this on the 1 minute, because I might not be able to find it. Okay, cool. All right, so let's see if we can find a TMade model here. So this is your inversion gap here, right? We tapped into we have the M15, right? And we have the consequent encroachment of that M15 right here. So midpoint of that M15, we're holding it nicely. And now we're going to look for that inversion for value gap, which happens here, right? But we do not get the fair value gap to the upside, sadly. Okay. So we have this M1 inversion here, but no fair value gap to the upside, right? So TMade model doesn't print. Now, TMade model prints here, right? Because you have this inversion. And then you also have, this is your gap here, right? So if you want to look at the overlapping part, which is this part here, that's your TMade. Okay. You have your sweep in liquidity here. This is your liquidity sweep. Okay. That's your liquidity sweep. This is your higher time frame imbalance, right? And here's your TMade model, which you could see gets tagged and then rips to the upside. But in this case, right, because we do have all these gaps here, you could hop into like a 3-minute chart, right? The fact that I have to go look for this again is mental. So here's the 3-minute right there. Right. So when there's multiple gaps like that, you can always go to a higher time frame here. And this makes beautiful sense. So here's your inversion, right? There's no inversion here. Okay. Here's the inversion. Okay. And this is the parts that overlap, right? So now you have this area here. Okay. That's your overlapping part. And look at that. We push in and we hold consequent encroachment of TMade. So for me to take this trade, okay, we have 1, we have 2, right? Liquidity sweep, higher time for balance. And now here's the TMade model. I'm going to go long on this trade here. So let's say that we go long here or even here. Let's say I go on the first tap, right? So where's my stop going to be? Well, it should be the bottom of this candle, which is the candle that creates the TMade model, right? So we're risking 43 points here. Okay. And we're going to target, what's the draw on liquidity, right? Most likely it's going to be like one of these highs here, right? So let's say this high. But what are we going to use to target that? Well, easy. We're going to grab the high to low, right, of this move. And we're going to look for premium and discount. Okay. And I'm looking for price. I want to see what price is going to do here at 0.79. That's one of the most key areas for me, right? And we do have these equal highs here as well. So this would be an important place for me to look at price when it arrives there. But I'm also going to use the standard deviation, right? So here is here's the low. Okay. Here's my low. That's going to use this swing point here. So -2 to -2.5 is here, okay, which is very far away, and -1 is here. So for this case, because -2 to -2.5, well, actually, hold on a second. Let me, I want to go to the 1 minute for the standard deviation. Sometimes you want to do, like, not sometimes, but a lot of times you want to do standard deviations on the 1 minute. It's going to help with just being more accurate, because the 1 minute is where price moves quicker, right? So that to, I'm going to use this to this, actually. That's how I would do it. Perfect. Beautiful. So -2 -2.5 is inside of this premium, right? And it's going to be taking out 3 highs. Okay. So I'm going to look to see how price reacts in this area. But because for me, the draw is these highs and they look really, really clean, right? You could literally draw this. So to me, that's low resting liquidity right there. That's LRL. That's LRL. So because I see this up here, I'm going to see how price reacts once we take the highs, right? And then I'm going to look to see potentially if we can get up and take these highs here. So this is one way to do it. But technically, if you want to be accurate, it would be up here. And then your -2, -2.5 is there, right? So -1 does line up with taking this low resting liquidity. So let's go back to the 3 minute. And where I marked that out, let's see what it looks like on the 3 minute here. Okay, yeah, exactly. That's how it, so kind of how I had it on the 3 minute is exactly right. So here's your swing high to that swing low, right? This candle takes out the previous candle, and this takes out the low here, right? So that's your standard deviation. Your -1 is where I would take partials, right? Obviously, because we do push back into premium right here, I'm going to see how price reacts to these highs here, right? Do we push up into this area and then sell back down, right? I want to see how it react. And what you can see is that we basically just chop right into that area, and there's no issues. We just continue to grind higher, which is great because that's what you want to see in the trade, right? So we're going to not fast forward. We're going to zoom over here and see, does price ever? Yes. So we're still in our trade here. Price never comes back and to our break even or anything like that. And we basically can take out one contract here at -1, right? If we have multiple contracts, and then you're looking for that -2, -2.5, which we do end up tagging here at on Tuesday, May 13th, right? Obviously, we wouldn't have been able to do that because trading prop firms, you have to close out end of day. So let's see, 16, which is that's 3 o'clock. So I probably would have already called it because that's 10 to 3. So I would have just probably taken profits here. As soon as we took that high here, as soon as that high gets taken, which happens right here, I would be out of this trade only because of the time. Yeah. I don't know. Sleeping? Are you serious? You've been sleeping? All right, 2Gen. BDA chosen one. Any more questions here? You guys getting it? Everything look good? Yeah, it's still great RR for sure. For sure. But yeah, main things, guys. Main things, right? You want to see your higher time frame imbalance, which we have right here. Okay. You want to see your liquidity being swept, okay, which we do right here. We've also swept this liquidity here as well. So multiple areas of liquidity being swept. Okay. We are inside of, if you look at this range here, okay, if I look at this range here from this low that caused this high here, okay, and we draw a fib here. We are inside of discount. So as soon as we come back in here, right, this is discount. So this consequent encroachment of that 15-minute is nicely sitting in discount. So that is where I want to engage. I want to engage at the consequent encroachment of that 15-minute that's inside of this discount, right? That is a beautiful, beautiful entry right here. So you can use premium to discount a lot for your trades. I do it all the time. That's kind of how I know. That's how I make sure that I'm in good trades, right? I don't want to be selling anything in discount, and I don't want to be buying anything in premium. So yeah. It's a great concept. Premium and discount honestly is a great concept because what's going to happen, right, is you're going to have people who see us breaking, okay, right here, taking this low, and they're going to chase this, okay? They're going to short this. But if you stick to only shorting premium, and only buying at discount, you're going to avoid trades like this, right? Because it doesn't make sense to short right when we're about to get into discount. That's literally the worst thing you can do. You want to create better trades for yourself, which means that you want to be shorting at the highs of discount, right? And actually, this is my bad. I needed to move this up here. So, it doesn't really matter much because we're still in discount. But yeah, you don't want to be selling anywhere around here, right? This doesn't make sense to sell here because this is coming into discount. We want to be selling the closest, like anywhere in this range here between here and here, right? That's where you want to be trying to find your shorts, right? In here in discount, where we want to find a good PD array, okay, that is going to take price back up. So using premium and discount is a way for us to find better probability trades, right? And then if you can pair liquidity sweeps and you can pair your higher time frame imbalance, and then you find the TMade model within all of that, it's a no-brainer. You're gonna kill it. And look at this. We're so bullish, right? That that we just we just shred right through the reversal range, like right through it. And then we use it as support and then just continue higher, which is kind of wild. Two Gen says, thanks, Alex. Appreciate your time tonight. TMade model has so much to help frame your overall perspective on price and put the odds in your favor. Yeah, 100%. And honestly, if people just stuck to the TMade model only, right, they would be getting payouts because you're gonna not be you're gonna wait for it's not they don't always form, right, because they're trading a reversal essentially, so it's not always going to form. But if you can use premium and discount ranges and you could find draws on liquidity and have liquidity sweeps to give you enough, fuel to push that trade in your favor, and you have a higher time frame imbalance where it's more than likely that buyers or sellers, depending on what, if that's a bearish or bullish imbalance. But we know that those areas are areas where they will engage, right? That's the idea behind it. So if I can find an area where I want to go long and I know buyers should be engaging, and I know that we've already taken the liquidity needed for that fuel to push the price higher, right? And I know that I'm in discount, right, for a buy, then those are all the things that are helping me frame this working out in my favor. And if you can just focus on trades like that, which might happen once or twice a day, it's going to change. It's going to change traders. It's going to change their life because most people right now are over trading. Most people are giving back profits from the morning, right? And yes, exactly. The reversals is where S&T is most likely, right? So finding S&T at those areas is just going to add and create a higher probability and a little bit higher of a win rate if you can find S&T in those areas, right? And there are traders who are incredible traders that literally will not take a trade unless the S&T is there, right? But I've back tested TMade, and I find that because we're using an overlapping area, that inversion fair value gap and that fair value gap, and if you're tying it with the sweeps and the higher time frame balances, it's very high probability, and you don't necessarily need the S&T, right? Obviously, S&T helps, but you don't need it. Yeah, exactly. The TMade model is definitely the bread and butter setup for sure. For sure, for sure. Exactly. S&T is just a cherry on top. Exactly. All right. Well, we've been live here for over an hour. I hope that the TMade model is clear and that you all understand how to use it. And yeah, I appreciate your guys' time. I appreciate you sitting through the hour with me. And let's make money this week, right? Let's crush it. All right, you take care too, Jen. Chosen One, take care. And everybody else who came in and out, appreciate you all. Till next Sunday, I believe Big will be streaming an educational stream on Sunday, so definitely stay tuned for that. But until then, I'll see you tomorrow. All right, take care.